Okay, next up, Amazon. The latest quarter revenue is 159 billions. This one, even you look at quarter numbers, right, is still a very clear trend of increasing revenue. Okay, so if you look at last 12 months, it's even clearer. It's almost like straight lines, right? Of course, similar to Apple, you can see that the year about, like right after COVID, right, there's a huge growth because people are shopping online more instead of going to physical stores, right? There's a run up in 2020. After that, the pace actually came down a little bit, but from 2021 onwards is like a smooth upward in terms of their revenue. If you look at their CAGR, the recent quarter compared to the quarter 1 year ago, it increased by 11%. So 11%, is it a good numbers? I would say it's a decent number. It's just that it is not as impressive as other companies that are growing, like for example 20 to 30%, right? 11%, I would say decent, and the growth rate actually increased slightly, right? If you compare to the previous quarter. So that's also a good thing to see. Then the next one, gross profit margin. Actually, gross profit margin, I haven't looked into the details, but I was a bit surprised when I look at the gross margin of 49%. It was like so high. I think this one's really, depending on how they classify what in terms of their expenses, what fall under the cost of goods sold and what fall under the normal expenses. But I would say don't focus too much on the gross profit margin. Let's look at their EBIT margin. I think this is more important. So again, I don't look at net income. It's because of the tax. I need to remove that. So EBIT margins to me is better measures in this case. Just a recap, right? Around 2022, when there's a lot of all these supply chain problem, and then they notice that they overbuilt in terms of their infrastructure. Basically, there's a lot of expenses that doesn't lead to revenue growth, right? So they have a lot of problem around like 2 years ago, and then after that they have all these, they call it regionalizations, meaning warehouses, network redesigning, these kind of things to actually improve their efficiency, right? Since then, right, I would say actually started about 2023 and 2024, the margins actually improved, and now EBIT margin is at 11%. This is very high because remember, when people talk about revenues, right, for Amazon, no one talk about their revenue, but people don't want to invest in Amazon because their margin is always very low. In fact, if you just take a snapshot as of, let's say 2022, right, you are looking at about 3% margin is like just few percentage drop, then you are loss making. That's why margin is something to pay attention to, right? So now margins, when margin increase to 11%, right, you just multiply by a huge revenue base, right? That's how they translate to a high operating income and net income. Operating income, the recent quarter is 17 billion, definitely a good number to see. And then for free cash flow, it is at 3 billion. I'll say that if you compare, right, like Amazon versus Apple, Amazon free cash flow, although they have operating income of 17 billion, but free cash flow is only 3 billion. What happened in between, right? It's because when it comes to Amazon, their capex, right, is a lot more aggressive as compared to Apple. So they really spend a lot, especially for example now AI space, right? They need to buy all this GPU, they need to throw money into their infrastructure. So they really spend a lot. That's why you don't see like a huge number of free cash flow. So they don't do all this, like heavy share buyback. The good thing is that still they are positive free cash flow, because if you look at their free cash flow number around 2022, right, that was negative because they really overspend when it comes to the infrastructure. So that's the problem that they were facing. But now they are out of that problem, and I think all this work on making the companies more efficient, that one is really bearing fruits. Then if you look at last 12 months, their free cash flow is at 43 billion. I think this is also something very impressive to see. And over last 12 months, as they smooth out all those, like the zigzagging, right, you can see that there's a clear trend, right? In 2022, that was the problem time. Now, 2024, things are getting better. The question is, you want to ask yourself, will these things reverse down, or is it like this is a new normal and continue to go up there, right? So to answer that questions, if we zoom out a little bit, right, you can see that in the early years of Amazon, right, they really spend pouring their money back to capex and just make their companies bigger, right? So that's why in terms of free cash flow, they don't have huge free cash flow even like 20 years ago. So it's always like try to break even in terms of their cash, and then continue to invest into their companies. And then from 2015, you can see that there's an increase, right, to 2020. So free cash flow has been going up and up and up and up. And then suddenly COVID hit, there's a huge negative free cash flow. And that's because they spend a lot in all the logistics, in capex. They are actually bleeding cash, right? And now we are going back, right? So if you look at this, right, and just focusing on their business, their mode, their all the efficiency things that they're working on, and the futures of AI, because Amazon is still the largest cloud companies, right? I'll say that this free cash flow, I don't expect it to, like come down, because as they continue to work on their business, I would say that this free cash flow will continue to trend up over time now. This is very important because for Amazon, they really invest a lot. At the same time, all these investments, right, is giving them a good return on capital, and those return on capital, right, will translate to more free cash flow in the future, and still they are like reinvest back a lot of those. So that's why this is ultimate growth companies, right? That's why they are able to grow to such a big revenue lah. So if you look at their revenue numbers, right, their revenue numbers is 620 billions in a year. You don't have to wait long for Amazons to become the largest company in terms of revenue. So that's free cash flow. Okay, next one is PE. If you look at the forward PE, it is at 36 times. But for Amazon, I would say that their earnings, they don't really manage their earnings. So I think earnings sometimes don't pay too much attention to their forward PE. But at least if you just compare to their historical numbers, right, because the earnings has been trending up well. So I'll say that's the reason why the PE came down. Actually, if you look at their prices, actually the price performance of Amazon was quite good. PEG at 1.68. Interestingly, Amazon PEG is lower than Apple, right? I would say it's still a good company to buy. It's just that valuation wise, I think they're fine. EPS, forward EPS 21%, definitely better than Apple. I don't know. Actually, I don't know how they come up with all these numbers. I think probably they are expecting a higher, like all these improvement in margins to continue, revenue growth to continue. That's how the analysts project the numbers. I actually don't know the details, and I don't really care. I care about the overall business model. I care about the strength of the business, and I want to expose to the e-commerce, their cloud business. So that's why I'm investing, right? So I don't care about how analysts project. But that's one just for your noting. Let's look into some details because I think for Amazon, right, all these things, let's say if you focus on the top line, right, it's a bit hard to digest. But if you look at the details, right, because they have two parts of their business. One is e-commerce, and then under e-commerce, there's the US part, and then there's the international, and then the other part is their cloud business, right? These are the, like the main pillar. So if you look at this pillar and understand the details, I think it's a lot more to like digest. For example, the first one, if you look at their US e-commerce, right, it continued to increase. So from operating income increased from 4.3 to 5.6, right? So continue to increase. International one, this is the part that I'm looking forward to, because this one actually it was negative operating income, right? You've seen negative 95 million, so now increased to 1.3 billion. So that's like flip from negative to positive, right? And then for AWS also continue to improve. And then overall, you look at the net income, right? So over the last 9 months, right, actually it almost doubled from 20 billions to 39 billions. So I think that's why financial wise they are improving at very healthy rate. So overall companies, their growth is about 11%. It is growing, decent growth, but this is a companies that's already very big. It is not growing at what 20 to 30% anymore. So this one you need to like take that into considerations. Okay, the next one, this one more breakdown, and I think this is I'll just focus on those area that they have done well, which is the part that I highlighted here. So you look at the North America segment, right, which is the e-commerce, right? Operating margins has increased from 1% to 5.9% in the most recent quarter. So 5.9% it is just a slight improvement compared to last quarter. I would say that even analysts also ask them, like, are they going to improve or not? So the answer is they say yes, but I don't think it is that easy to double from here, okay? But I would say that from 5.9 maybe slightly creeping up because of advertising and so on, right? So I think that's a good picture to see. And if you look at the international segment, the second box, right, it used to be loss-making, like negative 5.6%. I think that's because for their international business, they are, like the matured ones, say for example, Europe and UK. And there's also those that is new market. Say for example, I think even Singapore is one of their new market, right? So for new market that they entered, usually it started out losing money, and over time it will increase and as the scale picked up. So you can see that there's clear improvement here, right? From negative 5.6% increase to negative 3.6%, and then slowly increasing. So for Q2, they already flipped to positive. And then from 0.5% now become 1.5%, right? So I think don't look at this number and think that, oh, just 1% increase. Actually, it's nothing. It's not, because as this 1.5% increase to 3%, right? So at least for the international segment, their operating income will double. You know, like 1.3 can become 2.6 billion, right? Just because they increase all this operating margin by just 1 or 2%. So I think this is definitely trending on the right directions. They are improving on both e-commerce business. And then on AWS is actually their growth area because you see that their growth, right, is actually 19%. And this is definitely a good picture to see because back in just, like Q2 2023, right, their growth actually slowed down because their customers are actually cutting back when it comes to their cloud spending. They were growing at 12% back then, right? So then after that, this growth picked up since 2 or 3 quarters ago, from 13 to 17 to 19. So now 19%, I would say this is definitely the growth area within the entire business. Because for other business, I would say, let's say e-commerce, they are growing at about 10%. And then lastly, the fourth box, right? If you look at the operating margin of AWS, right, also improved because you see from 25% now up to 35%, right? So they are growing. So I would say that's if you look at the financials, right, whether you look at the e-commerce side or you look at AWS side, whether you look at the growth, revenue growth, or you look at the margins, everything looks good, everything's trending well. And the message sent by the management is that all these things will continue. So I would say that this company is a good buy. I will continue to hold on to my positions. It's on one of my top holdings. Okay, this one I won't go into the details. I will just say that analysts are asking because analysts really don't know whether these AI things they are something that's like is it just a hype or is it something that they are just a barely started and it will grow to a much bigger lines, right? So they're asking, they're getting some tips from the management. And what Jesse said was that I want you to focus on this, right? I think the AI space for sure, earlier stage, more fluid and dynamic than our non-AI part of AWS. But it's also true that people aren't showing up for 30,000 chips in a day. They are planning in advance. So we have very significant demand signals giving us an idea about how much we need. And I think that one of the differences, if we were able to get insight of the economics of the different types of providers here and how well they manage that utilizations and capacity, it has a very direct impact on what kinds of margins you have over time and what kind of capital efficiency you also have over time. And then the last paragraph here is basically to say that although now when they just started to ramp up the capex on AI, margins definitely doesn't look good in the initial years. But as time goes on, right, as they have all this, focus on building the infrastructure, they know how to, sort out all this logistic about cloud, right? So over time, this margin will improve, and this will be a big things for AWS. So I think all this AI definitely is still a growth area for Amazon, and I do believe that whatever margin that they are looking at, right, I would say that they are able to maintain this kind of margin, even improve it over time, and whatever sales that you are looking at, right? For example, now AWS, in terms of their sales number, latest quarter, 27 billion. Over 1 year, revenue is like 100 billions, right? I foresee that this number, 100 billions, looks like a large number today, right? But you just invest in this company for, like, let's call it like 5 years, 10 years down the road, right? You will notice that this AWS revenue, right, will become a lot larger in the future. So I think that's why I continue to invest in this company.